If you're a Tesla investor, then understanding full self-driving isn't just an option, it's absolutely essential. But with all the hype and all the headlines, what can it actually do today? And maybe more importantly, what does that mean for your investment? Let's break it all down.
And this quote really sets the stage, doesn't it? We're not just talking about another feature here, like heated seats or a better sound system. For Tesla and for Elon Musk, getting to true autonomy is pretty much an all-or-nothing bet. It's the key that could unlock trillions in value, or it could be the single biggest drag on the company's resources.
So what is this big promise that's had Wall Street captivated for years? Well, it's a vision that goes way beyond just making your daily commute a little easier. It's about fundamentally rewriting the rules of transportation itself. This is the bull case in a nutshell. The whole idea is that every single Tesla sold could one day join this huge autonomous ride-hailing network. So instead of your car just sitting in the garage 95% of the time, it could be out there earning you and Tesla money 24/7. This completely flips the script, you see. It changes Tesla from the company that sells you a car once into a software and service provider with recurring revenue and with profit margins that would just dwarf traditional car manufacturing. And this number, well, it shows you just how much of Tesla's future is tied to that vision. Prominent tech investors like ARK Invest have modeled this whole thing out, and their analysis suggests that by 2029, almost 90% of Tesla's entire value could come from this robotaxi business. So the takeaway here is crucial. The market isn't just pricing Tesla as a car company. A huge piece of its valuation is banking on the success of FSD. Okay, so that's the dream. That's the future. But as investors, we have to ground ourselves in today's reality. So what can FSD actually do right now if you get into a Tesla today?
In its current supervised form, FSD is an extremely advanced driver assist system. I mean, on the highway, it can handle pretty much everything, staying in its lane, changing lanes, even taking the off-ramp. And in the city, it can navigate through intersections, stop for red lights, and make turns. It can also park itself, and you can even summon it from a parking spot with your phone. And the key thing is, all of this is constantly getting better through those over-the-air software updates.
And from a safety perspective, Tesla's own data is pretty compelling. Back in 2023, they reported about one crash for every 7 million miles driven with their autopilot tech engaged. Now, to put that in perspective, that's about 9 times safer than the US average for us human drivers. Of course, it's important to remember this is Tesla's data, but it does suggest that even as an assistant, the system is already preventing a lot of accidents.
But, and this is a really big but for investors, there is a massive, massive gap between that impressive driver assist system and the fully autonomous robotaxi dream. So let's get real and look at the limitations.
Okay, let's be crystal clear on this one. Despite the name Full Self-Driving, the system is officially classified as a Level 2 driver assist system. Now, this is a big step up from the standard autopilot, which just handles basic lane keeping and cruise control. FSD adds all those city driving features. But it still means the driver is 100% legally responsible at all times. Your hands have to be on the wheel, your eyes on the road. This name has, unsurprisingly, created a lot of confusion and attracted some serious scrutiny from regulators.
And this history, well, it's a key part of the investment risk. The goalposts for true autonomy have been moved, and moved again. From promising complete autonomy by 2018 to a full robotaxi network in 2020, the timelines have consistently slipped. Even the pilot launch plan for 2025 in Austin relies on remote safety operators, which is a long way from the unsupervised vision. For an investor, this pattern of overpromising raises some serious questions about execution risk.
And this slide really highlights the competitive landscape. When you look at Tesla's approach versus the current market leader, Waymo, you see two completely different philosophies. Tesla is betting the farm on just cameras, believing its massive trove of real-world data from millions of cars will eventually solve the problem. Waymo, on the other hand, is throwing the kitchen sink at it. LiDAR, which uses lasers to build a 3D map, radar, the whole shebang. And while Waymo is already running a driverless public service in some cities, Tesla's big bet is that its camera-only system will end up being way cheaper and easier to scale. And it's not just about the competition. There are other major roadblocks. You've got strict regulations, especially in places like Europe, that limit FSD's features. The system still struggles with tricky edge cases like complex construction zones or really bad weather. Musk himself has admitted that some of the older hardware in cars just isn't powerful enough for true autonomy. And, as we're about to see, not that many people are actually buying it.
All right, so how does all of this, the incredible promise, the current reality, and all those hurdles, how does it all translate into dollars and cents for Tesla's valuation?
Let's open up the investor's ledger. On the risk side, you have staggering costs. We're talking an estimated $10 billion just on R&D for autonomy in 2024 alone. You have the legal exposure from accidents and, of course, the credibility risk from all those missed deadlines. But on the opportunity side, wow, the payoff is just immense. We're talking a potential recurring revenue machine, that high-margin robotaxi business, and the justification for that massive bull case valuation.
You know, one of the clearest signals of these challenges has been the price. To try and get more people to buy in, Tesla had to slash the one-time purchase price almost in half, from a hefty $15,000 all the way down to $8,000. Now, that might boost some short-term sales, but it's a pretty clear signal that consumers just weren't biting at that higher price point.
And this slide, this really puts that adoption challenge into stark relief, doesn't it? According to Tesla's own CFO, only about 12% of the entire global fleet has actually paid for FSD. That shows you the enormous gap between where we are today and that robotaxi vision. To build that massive recurring revenue business, that 12% number needs to get a whole lot bigger.
So, as an investor, how do you process all of this? What are the key things you really need to be watching to see how this story plays out? Here's your checklist. First up, watch the regulators. Approvals in the US, Europe, and especially China are non-negotiable hurdles. Second, track the subscription numbers. Is that $99 a month plan actually gaining real traction? Third, look for a real unsupervised robotaxi service at scale, not just another limited pilot program. And finally, don't take your eye off the competition. Waymo's progress is the benchmark that Tesla's promises have to be measured against. You know, in the end, it really all boils down to this one single critical question. Tesla has billions and billions of miles of real-world driving data. That's an advantage no competitor can really match. But companies like Waymo are already running the kind of driverless services that Tesla is still just promising. For investors, deciding whether that data advantage is enough to win a race they're late to start, well, that's the key to understanding the future of Tesla.